Sentiment is brutal right now, and you have to be very, very honest about that.
A lot of folks are kind of questioning if we're in a 4-year cycle.
All hell is breaking loose in crypto markets as Bitcoin sinks even lower, about to break under $90,000.
To my knowledge, I have basically nothing left.
Literally, Bitcoin hasn't been this low since all the way back in April of 2025. In fact, Polymarket odds show that Bitcoin crashing below $80,000 this year are increasing 28% in rising, a huge spike in Polymarket, many people betting that it is more and more likely that Bitcoin goes into the 70s. Some even suggesting previous cycles' all-time highs into the 60s. We'll talk about this in a second. And, the reason why Bitcoin is dipping so hard, the consensus seems to be that OG whales are dragging the dip. 10-year plus Bitcoin holders are selling Bitcoin's IPO moment, some people saying. And of course, many are saying that the 4-year cycle has been confirmed. The top is in. The end of 2025 was set to be the top of the 4-year cycle into the bear market. Many people saying that's what's happening now. A lot of smart people are saying that history is repeating in that the 4-year cycle played out exactly like it always has been, and the deep bear market is just beginning. That's what PhD and quant analyst Ben Cowan said in our interview from the other day.
But if you go back and look at all the major tops, they've always been in the fourth quarter of the post-election year. Right, you have Q4 of 2013, Q4 of 2017, Q4 of 2021. I just want people to be aware that, history might repeat itself.
If you want the argument as to why the top is in, make sure you check out this interview. A lot of people are watching this, and Ben is very smart and provides a lot of reasoning here. In today's video, I want to present you with a counter narrative, a different opinion.
Hong Lee saying that Ethereum is bottoming this week.
Everybody's saying that bear market is just beginning. 2022 is starting again. Well, over the next 3 minutes, let's talk about why the bear market isn't about to begin, why this time is nowhere like 2022. In fact, today, based on macro conditions, it's looking more like we're in 2019 than it is 2022, and I'll explain why. Smash the like button, subscribe to Altcoin Daily for daily crypto videos keeping you informed. And obviously this is something we've been talking about for a while. The end of 2025 is actually nothing like the end of 2021, and 2026 I don't think it's going to play out like 2022. In 2022, we had 3 Arrow Capital, one of the biggest hedge funds blow up, Voyager blow up, Celsius blow up, Luna blow up, FTX blow up, inflation spiking to 9%, rate hikes from 0 to 400, one of the biggest rate hiking cycles in history, 0 crypto ETFs or TradFi involvement. The SEC was literally trying to kill crypto. And so thinking about where we are now, pro-crypto US president, pro-crypto SEC, biggest asset manager in the world pushing crypto, ETFs, inflation at 3%, interest rates coming down. There's a lot of reason to suggest that we're about to bounce hard this week. Before we get to Tom Lee, let me share what Coinbase's head of strategy for institutions says about what's going on in the market today. They're asking him, hey, Bitcoin can fall 70%, 80%. So isn't it true that Bitcoin's price could fall to $60,000? I mean, how low can Bitcoin go? Well, 500 billion Coinbase head of institutional strategy has weighed in, and he says this is actually what's going on in crypto, and this is what their analysts are expecting to happen next. Listen.
Let's see, 125, could it go down to 60,000?
So mathematically, it is becoming less volatile. Just as a strict standard deviation calculation, it is becoming less volatile. You would expect that as you have a wider and deeper market. You have more different types of investors. Obviously, the ETFs have brought in a flood of retail. You have more institutions. Harvard Endowment announced they hold more Bitcoin than gold the other day. So mathematically, that's what you would expect. It doesn't feel that way, to be very honest, right? The sentiment is brutal right now, and you have to be very, very honest about that. Just like I'm sure, you're holding gold, you feel smart. You didn't feel so smart in 2008 when gold lost a third of its value.
For years and years and years, you just felt average.
You feel smart.
Yeah.
Right? So, as we've said many times on this show, trying to market time any volatile asset can get you in a lot of trouble. If you've systematically invested in Bitcoin over a 5-year period, you're up an extraordinary amount. Even year to date, while not great, both Bitcoin and Ethereum, while slightly negative, Ethereum's a little bit up. If you stake your assets, you can earn a higher yield, so you're still net positive. Solana's down materially for the year, 25%, year on year 41%. However, we had the single best ETF launch of the year for a Solana ETF. So in these situations, I try to step back and ask myself, what has fundamentally changed since, let's say, late September, when everyone was incredibly bullish? And the answer for me is nothing. Structurally, we're where we were, if not better. We have the Czech National Bank announcing a central bank Bitcoin purchase, the first Eurozone country to do that. You've got Citibank and JP Morgan announcing stablecoins that they're using to facilitate customer transactions. You've got Harvard Endowment's announcement. You have successful ETF launches. So it's a challenging environment currently, but in my house, we like apples. I don't like apples less when they're on sale. So if you like this asset, you should like it at a discount.
What happens if you didn't like it in September and you like it now? Should you like it now at a discount? Because price does matter. I know you're sort of suggesting, you're suggesting prices don't matter at all.
If you didn't like it because you thought it was overbought, yes. If you didn't like it because you don't agree structurally, probably not.
No, I'm just saying, like sometimes, avocados go up and down in price. You may love avocados, but you may say, this is a little rich for my
Sure.
The price tag's a little high right now. I'm not going to buy the avocados, but you know what? Sure. The next time I walk into the market and the avocados that are a better price I'll take some.
So you're a technical avocado trader in this example, and that makes perfect sense. I would expect technical traders would be buying into the mean reversion trade at this point. So that's kind of why I'm a little bit confident. Again, because structurally, I don't see a regulatory environment in the U.S. or globally that is any worse than it was pre-October 2nd.
So is the bottom in? Is this week, what's happening now, actually the bottoming period? I mean, to be honest, if you take a look at the history of Bitcoin bull markets, this kind of final flush before the next leg up is what we've seen so many times in crypto, especially in the 2017 cycle. Could we be here? Could we be here? So let's let Tom Lee weigh in. He says Bitcoin and specifically Ethereum will bottom this week.
And personally, I think that we're pretty close to bottoming this week.
What makes you stay bullish?
Well, there's the story of building on Ethereum, and we know that there is a lot taking place. There are stablecoin creations. Larry Fink and BlackRock and Wall Street want to tokenize assets, bring stocks, bonds, real estate onto the blockchain, and they have to find a neutral 100% uptime blockchain. That's Ethereum. And that's the fundamental story. The price, of course, for Ethereum will fluctuate because crypto is hyper volatile. In fact, it's kind of it's sort of a feature of the blockchain itself. And I think we've been in a downtrend, unfortunately. A lot of folks are kind of questioning if we're in a 4-year cycle for Bitcoin. So we talk about that in the chairman's message we published this morning, that the most correlated factor to Bitcoin prices when you see it at Bitcoin at a peak actually is the ISM. So I think we're still in a correction phase of crypto. Crypto suffered from that liquidation event on October 10th, but because the fundamental story is intact and we crypto discounts the future, that's why it's volatile, but it still looks pretty attractive here. And personally, I think that we're pretty close to bottoming this week.
Time for Ethereum, because you've got this general market risk-off mentality. So what are some of the idiosyncratic elements that we should be thinking about as it pertains to Ethereum in the meantime?
Well, Ethereum kind of has several ways that it establishes a floor. One is that the value of all the assets locked onto the blockchain, and that number is growing. But historically, Ethereum bottoms when that ratio is about 50%. So I'd say we're pretty close to that level. That's why I think Ethereum probably is bottoming this week. But the other way to look at Ethereum is really its price ratio or even its network value ratio to Bitcoin. It currently sits at, this number is 0.032. The long-term average, like the 8-year average, if we were just to trade to that 8-year average, would put Ethereum at around 12,000. So I think Ethereum is undervalued because, number one, the story is gaining relative to Bitcoin this year. But two, we're getting this sort of intrinsic floor because of the value that the assets locked onto the Ethereum blockchain.
All right. Tom Lee saying that Ethereum is bottoming this week.
And so for the past month or so, if you've been shorting crypto, you've been winning. Who knows how long this will be profitable? Of course, longing crypto can be profitable too if you're betting the price will go up. I have a hodl position and a trading position. You can trade crypto and make even more money. 50% deposit bonuses going on right now on Weex. 50% deposit bonuses plus an additional $30K in additional rewards. Create an account today. Take advantage of 50% deposit bonuses. My name is Aaron at Altcoin Daily. Let me know if you're buying the dip or what you're doing. I'll see you tomorrow.